All right, there we go, guys. What's going on? Welcome in, everybody. Hopefully this Wi-Fi stays good. What's going on, everybody? Appreciate you guys for rocking with us. We're about an hour away, obviously, from the Fed decision. Big decision. You know, we used to go live for these FOMC meetings all the time, but they haven't been as interesting, you know, for a while. But this one is very interesting. This one is very interesting because we're finally going to see a pivot, right? We're finally going to see something different, not just keep everything the same. At least that's what we're expecting, right? Expectations are uh, that we're going to get some type of move, a 25 basis point move potentially, or a 50 basis point move. So I wanted to come on here, hang out with you guys, talk about the markets a little bit, get ready for, Jay Powell and all of that. We'll try to stream it live. If anything, what I'll do is I'll probably play it through the phone because I don't want to. Yeah, I've got decent Wi-Fi right now, but it's not great. So we'll see what happens. Hopefully, we can keep the stream going. I am in Singapore right now. Sound is low. Okay, let's see if we can raise up the mic volume. I gotcha. Hold on. Let's see here. Okay, mic volume is all the way up pretty much. Is that a little bit better? I just got to talk a little bit louder. Let me know if you guys can hear me okay. Exciting night. Yeah, it's 1:34 a.m. right now. 1:34 a.m. right now in Singapore. So we know that it's 1:34 p.m. Eastern back home in the States, at least on the East Coast where I'm from. Can hear you fine. Okay, good. Good stuff. Appreciate you guys rocking with us. You guys know, smash the like button if you're on YouTube. If you're over on X, welcome in. We should be dual streaming it here on both YouTube and X. Yeah, I see some people commenting in from X. What's going on, everybody? So Bitcoin is climbing back up towards 60K here. It's been an interesting move in the market. Very interesting. And it really has thrown me for a loop. We have what's called a CME gap to fill. Basically, we should, if you look at it from the technical standpoint, we should see Bitcoin come back down one more time to refill that CME gap right around 53, 54,000. It doesn't have to happen like that though, right? Nothing is guaranteed in crypto. In fact, when you think something's going to happen, usually the opposite happens, which is, something we, we've come to find out. But what's up, Chris? How you doing, bro? What's going on, man? Zach, what's going on with Turbo? I don't know. Is it pumping like crazy? We got a little bit of time before the meeting here. Turbo's up a little bit, 10% looks like. Almost up there to a 350 mil market cap. We'll take it. Nice. Nice little pump there for Turbo. Love it. Love it. Yeah, man, it's late here in Singapore, that's for sure. But wanted to stay up. We had a big event today or tonight after the first day of Token 2049, guys. Man, what an exciting first day of Token 2049. This conference is for real, guys. This conference is for real. Massive. I mean, every big player in crypto is there. Every major player. And I think this is turning out to be my favorite conference to go to. I went to Dubai, Token 49 there. Now here in Singapore for Token 2049. You really get to see all of the things that are happening outside of Bitcoin, right? There is so much happening. You know what I noticed that I thought was really interesting? Something I noticed today that I thought was really interesting. Did you watch my live stream on Twitter earlier with Vitalik? Jeffrey? We streamed Vitalik when he was on stage. That was kind of a disaster, I'm not going to lie. He was singing on stage. It was okay. The whole singing thing, but threw people for a loop. But I think we're still, it's not going to be detrimental to the price of ETH long term or anything. Yeah, MSI is pumping a little bit too. I saw that, David. But you know what caught my eye today more than anything? I am seeing a big trend happen right now. And guys, if you're checking in for the FOMC meeting, of course we're going to get there. We've got some time leading up to it here. 2:30 Jay Powell take the stage. So we've got some time. But talking about token 2049 here, the thing that really struck me these last few conferences that I've been at, I think it was the same thing in, you know, Austin at Consensus. I saw it there. I saw a little bit of it at Bitcoin Nashville. Saw a lot of it in Dubai and a lot of it here already in Singapore on day one of token 2049, is the fact that there are a lot of companies coming from traditional finance into DeFi. You know, we always talk about bridging that gap, right, from Web 2 to Web 3. Well, that gap is slowly being bridged, and I'm seeing it with different companies that are coming into the fold. And it's very exciting because that tells me that our industry is starting to really take form, right? When you have traditional finance people, traditional finance companies coming on the other side of the fence to play in the DeFi arena, that's a big deal. I did not see a lot of that going to conferences, let's say 2 years ago, even last year. That to me has been a 2024 thing, and it's very bullish. Very, very bullish. So that to me is definitely a positive sign that our industry is growing. It's here to stay. You know, there's a lot of talk about RWA and DPIN. Those are hotbed areas right now. Tons of companies out there building in both of these areas, both DPIN, a lot of AI, DPIN, and RWA. Exactly what we talk about all the time on the channel. It's represented at these conferences, right? So those are definitely the flavors of the week for sure. Obviously, meme coins, they're there too. They're not going anywhere, baby. But they don't have a huge presence at these conferences as much. Stopped by the Caspa booth today, was very impressed with them. So, yeah, I mean, it was a great day, man. It was exhausting for sure, but a great day. Got up super early, made some content, and then man, we were there all day at the conference, and then we had 3 private events. Which, if you ever go to these conferences, you want to get into these private events. That's where deals are done, right? That's where the big conversations are had. But I don't know how many people I added to my Telegram today, just connecting with all different people from all different areas of crypto. It's a good time to be in this space, guys. It's a good time to be in this space. And I know, sometimes we don't necessarily see it. There's a lot of negative news, I think, that surfaces to the top, and people fixate on that negative news, right? It's just kind of, the normal news cycle, how it works, right? Negative news sells, but people fixate on that, and they end up making emotional decisions, with their bags. And quite frankly, they fumble the bag. You know what I mean? And you just got to pull back sometimes and realize the big picture here and where we're going, and just how early we are to this market, right? So, Brett definitely had a presence. I don't mean no presence, bro. I just mean very, very, less, very, very, very much so less than, some of the big sectors like AI, RWA. No, Brett was there, bro. Listen, I'm a huge Brett holder, Gingy. Don't take it personal, bro. I'm a huge Brett holder. It's all good in the hood, bro. We're all good. Elias, Solana. Big Solana bull. Yeah, Solana's down here. Where is it? 128. Let's see what altcoins are moving. Anything? Sui's still up. Man, Sui's been on a really nice run, huh? Sui's up 28.5% here in the last week. Love it, man. Love it. It's looking really, really solid. Multiverse was actually at the event. I saw them out there. Saw a lot of these top crypto projects. Chainlink is at token 2049. Injective is there. I'm sure Sui is too. This place is massive. I feel like I still didn't get around to everything, and I was there all day today. At Token 2049. Yeah, I agree, Chris. I mean, yeah, a lot of times, these conferences are kind of built more or less for, no, I wouldn't say institutional investors, but more or less like, the people that are trying to crowdfund and raise, and whereas like meme coins are just launch it, decentralized, have fun, see how high the community takes it. And so much of it is driven on social media, right? Make sure you guys give Chris a follow too. Shout out to Chris, man. Appreciate you for rocking with us, man. Thanks for stopping by the stream. Make sure you guys give Chris a follow. He's great on X too. Great content creator in the space. So definitely show him some love. Appreciate you rocking with us, brother. Did you look at ADA already today? I did not, but we're down to 33 cents, I see. What would you like me to talk about? It's much of the same right now with Cardano. Listen, I got a big Cardano bag, Tim, and I'm not giving up on Cardano. It's just, you got to have patience right now. We're waiting for the altcoin season. We haven't had it yet. I mean, we've essentially been down at this, 33-ish cent level since beginning of August. We funneled all the way down here. We had a nice run back in March when Bitcoin set its all-time high. It went up to like 80 cents, Cardano did. And Cardano will run again. Cardano will run again. It's just a matter of time, But for right now, it's just all about stacking your chips, packing your bags, getting yourself prepared for the altcoin season. You got it, brother. MSI, I saw that little pump today. Chris, 2 Neros on Binance. Yeah, that was a crazy turn of events, wasn't it? MSI making some moves, huh? Love that name. Monkey shit Inu. Me neither. Added a good amount again. Yeah, I mean, I was adding quite a bit of Cardano, Tim, down at 25 cents. We were down at 25 cents a lot. Remember, in the bear market, we were down there quite a bit. I'm going to get off my Wi-Fi on my phone just to save some juice. Hopefully that helps. Patience for all, yes. By October 7th, what's your thoughts on XRP? I really don't know what's going to happen. I don't know if they're going to appeal. But to be honest with you, even if the SEC appeals, I don't think it necessarily means anything. I mean, I still think even if they appeal, I mean, history would show us that that's probably not going to bode well for them. Ripple's notched a ton of victories, and I think they're really in the driver's seat here, regardless of what happens on October 7th. That's my take as of right now. Hey, bro, great show. Army of Turbo, what's up? What do you think about this recent notion regarding dilution within the crypto space with the launch of 500,000 new coins? Oh, there's definitely some dilution. 100%. But there's also a lack of retail money, right? So like you're feeling dilution more right now than you would if we were in peak bull season. And if you're in peak bull season, people, chase the faster horses. They chase the OGs. You'll see, OG layer ones, OG meme coins. Money will start to concentrate, I think, back into solidified, solid plays. We're just not there yet, bro. We're just not there yet. It's just that. I mean, we're just not there yet. There's not enough liquidity right now. There's not enough people. And right now, the money that's in here, in the retail side, it's just cycling through different meme coins, cycling different narratives. AI has its run. I mean, there are some institutional investors in a lot of these big projects too, like in AI, DPIN, RWA. But from the retail standpoint, there's a lot of, just jumping, hop, skipping in and out of different cryptos right now. I'm packing my bags in quite a few big horses. Caspa's one for me. Sui is another. Did you guys see big time? We're up big time on this trade, actually. This thing is looking unbelievable. If you guys don't know about this, we got into this at 5 cents. I put a pretty penny in here, and this thing has been crushing it. Look at this, up 75% in the last 7 days. This is a gaming play. 86% in the last month. Shoot, I didn't even know it popped all the way up past 17 cents momentarily. That's crazy. Was that today? Yeah, it got up there in the last 7 days. Yeah, it was today. Yesterday. But Big Time is an RPG style game. If you go to the alt chart, look how far it's down still. But we caught the bottom down in here, like 5 cents. Shout out to Crash. Shout out to Crash, the guy who called Brett. I saw him talk about this, and I, did a deep dive into it. And about 3 hours later, I realized they were listed on Coinbase. Not a lot of people were talking about them. Their all-time high is 98 cents, guys. And if you go to their about, it's a multiplayer RPG for PC. Melds a fast combat system with an open game economy where players have an active role in generating and exchanging game items. Like, talk about that open marketplace that we've talked about with gaming. Big Time's doing it. Their approach is to make Web3 elements invisible to players so they don't represent an obstacle to entertainment and cater to a broader audience. I mean, could there be a better way to build a game that uses on-chain assets and they're tradable, and they can be exchanged, and they're making it seem like you're not even in crypto? Because people hear that word crypto and they're like, no, man, But this has been a good play for me. And the thing is, if you're looking at this zooming out, 9 months ago, they were at 98 cents. So I'm still in the trade. Who knows? Hopefully it continues to go up. I think gaming's going to have a run again. Hey, Bitcoin just crossed over 60K. There we go. Going to be a lot of volatility, guys. That's for sure. Maybe we might be opening up some plays. We might be opening up some trades even. Might even be opening up some trades. Maybe even open up a few small leverage positions on Margex with Bitcoin as we watch it with the FOMC. A lot of times we get, a big pump and then sell off. We do see that from time to time. We'll open up Twitter too, because FOMC, we usually get the actual data before J Powell speaks. I'm going to get rid of some of these tabs here. There we go. But yeah, man, Token 2049, big hit day one, man. It was awesome. Can't wait for tomorrow. Gonna hit a bunch of other tables that I didn't hit today. Crypto traders waiting to get liquidated 15 seconds after FOMC. That's classic. Here comes Powell walking out to today's Federal Reserve meeting. Man, Austin's not here. He's not here in Singapore. He couldn't make it. He's got his son's playing football. So he's got to be there for the games. What do you guys think? 50 basis point move? 25 basis point move? What do you guys think? You think they're going to go 50 basis points here? Yeah, FOMC does not start until 39 minutes. We're just rocking with you, man. We're just rocking with you guys a little bit live and hanging out, leading up to it. Hoping 50. Larry says 50. Tech says 25. 75. Michael says 75. What do you guys think? Drop your guesses in the chat. Also, if you haven't hit the like button, definitely do that for us. Helps us out tremendously. And subscribe to the channel if you guys haven't already. I put a video out. People are bashing me because they're like, get your clickbait title out of there. I just wanted to make some points, and that was the way I knew I could get people to watch it. So it's just, we got to play the game. Got to play the cards we're dealt here. FOMC meaning crypto is over, question mark. And you guys can watch the video later. I think it was just reiterating some really important points, you know, about just where we are right now and not getting too high and too low. Some things to kind of, you know, check yourself before you wreck yourself kind of thing in the markets, you know. But I feel really good about where we are. I didn't think Bitcoin would be up here at 60K, to be honest. We're pumping, guys. We're pumping. We're pumping. All right, let's see what's going on here with Bitcoin. Yeah, nice pump going on with Bitcoin right now. Very nice pump here on the 1 day. Let's get into the 1 minute. Why the hell not? Why the hell not? Well, we got a momentum up flash in there on XT Algo. It's my trading indicator, guys. Look, a couple little trades right here just in the last 30 minutes or so. We are pumping. So hanging out over 60K, I'll take it, man. I didn't think we'd be here. I really did not think we'd be here, to be honest. You asked us what we think. What do you think? To be honest, man, I'm hearing 25 as much as I'm hearing 50. You know what I mean? I'm hearing, it just depends on which analyst you watch or listen to. This analyst over here says 50. This analyst says 25. I'd love to see 50, but we're going to find out. We're going to find out together, that's for sure. We are going to find out. There's Jay Powell. Final FOMC estimates from my Bloomberg. Every single bank other than JP Morgan is predicting a 25 basis point rate cut today. JP Morgan is currently the only major bank that is predicting a 50 basis point rate cut today. Okay, that's interesting. Right? That's some interesting insight. And I was looking at JP Morgan. That's who I was referencing. But I put a good amount of stock in JP Morgan's predictions when it comes to FOMC rate cuts. Not when they're talking about Bitcoin, because they're a little wishy-washy when it comes to Bitcoin. What do you think happens to the market with a drop, no matter how much? You know, I said that this could definitely be, I don't want to say a nothing burger, but I'm not predicting some crazy pump or some crazy dump. Either way, I think we're going to be range bound, you know, continuing today from like 57 to 60. That'd be my guess. Hey, thanks for the super chat, Johan. What do you think about Turbo for the rate cuts? Listen, Turbo is built on Ethereum. It's a solid meme coin. I don't think it's going anywhere. You know, I definitely don't think it's going anywhere. Big hello from Amsterdam. Thanks for the live stream. What's up, Michael? Can you give me your honest opinion on Tonic? I'm not invested. There's my honest opinion. I know about it. I don't hate it or anything. Just haven't allocated any capital toward it. So this is a great day to trade, guys. What's your prediction for this week's Fed? 25 or 50? Nice. Let's see. Seeing if anybody else had some like good content around this. Definitely the most the most important FOMC meeting in a really long time. First rate cut. This will be the first rate cut since March 2020, as long as we get a rate cut. Now, if we don't get a rate cut, that would be shocking. That would be shocking if we don't get a rate cut. I would be shocked if we didn't get a rate cut. If you guys are on X, if you guys want to help me retweet this so we get more people checking out the stream, that'd be awesome. Oh, let's see. If I had to guess, if I'm a betting man in a row, my rule for the past 2 decades on Fed days: day 1 is the overreaction, day 2 is the reaction to day 1, day 3 we find out what the market really thinks about the Fed decision. That's an interesting perspective. I like that. Be patient, don't overreact, don't have FOMO, let time be your friend, not your enemy. That's a good point. You know, we do see a lot of volatility day 1, and usually kind of settles in day 2 and day 3, and we really get a better idea of what the market really has to say. You know what I mean? It's actually a really good point. Let's see here. There was a couple other. Tomorrow's Fed decision will be historic. The market has never been so uncertain about a Fed interest rate decision in at least 15 years. If the Fed cuts by 25 basis points, it would mark the largest surprise seen since 2008 by a wide margin. On the other hand, if the central bank cuts by 50 basis points, it would mark the largest surprise since 2009. The Fed has strived to avoid market surprises using its speeches and forward guidance since the early 2000s. Fed rate decision is coming, guys. Let's see what we got. Hey, Charles is at, I haven't seen Charles yet. He's at token 2049. I met these guys today, Manifest AI. Bitcoin dominance is breaking to highs not seen in over 5 years. Interesting. Previous confirmed breakout beyond 57.68% and preceded strong uptrends at 71. Wow, that's crazy. Buy more Bitcoin is what that said. All right, so we should have the decision. Where's the decision? Where's the decision? What's going on, everybody? How you guys doing? My girlfriend's saying 75%. That'd be insane. I'm seeing 50. Already made 50. 50 points? Federal Reserve cuts interest rates by 50 basis points. Wait, what? There it is. The Federal Reserve cuts rates by 50 basis points. The median projection has 2 more. Here we go. 25 basis point rate cuts in 2024. That makes sense. If they're going to do 2 more 25 basis point, I could see that for a total of 100 for this year. Fed Governor Mickey Bowman dissented in favor of a smaller 25 basis point. First dissent by a governor since 2005. Interesting. So 50 basis points is the move, guys. And the projection is that we're going to see 2 more 25 basis point moves. Press conference at 2:30 here. All right. Market is pumping. Oh my gosh, Bitcoin. Bitcoin just pumped like crazy. On the 50 basis point move, it's selling off now though. Oh man, right when this news came out, could have took a nice little long position. We're just going to watch it. I'm not going to overreact right now. I'm going to take my position probably tomorrow sometime once I see this kind of settle in. Here goes Bitcoin, though. No matter what, we're loving it. Damn, I wish I had a freaking Bitcoin long right now on Margex. I don't. Overall market, guys, is going to be looking pretty good, I'm guessing. Yeah, things are flipping here. Mostly Bitcoin, though. Bitcoin dominance, man, continues to climb. So the decision is in. 50 basis point move. Let me put that up on the banner here. Hold on. Make a banner here. Wow, that's pretty shocking, man. 50 basis points. That's pretty insane. Pretty insane, guys. If you're just checking in, welcome. 50 basis point move by the Feds. Bitcoin's pumping, but now selling off. See, this is what I mean. It gets very, very volatile here. So if you didn't catch that first candle, look, now you're in trouble. Now we're right back down to where we, were before the decision was made. Look at the volatility here, guys. So we wicked all the way up to almost 61K. $50 points. I'm kind of new, but is this good, bad, average? Well, I mean, it's one of the things that could have happened. We knew it was going to be a cut. It was either going to be 25 or 50. JP Morgan was strong about 50. That's why I've been saying, hey, there's a true chance that it could be 50, but most of the analysts out there were saying 25. 50 it is. Their projections on Fed rate decisions. Bitcoin is where the big money already is. Everybody who cares is going after the throne. 100%, bro. Yeah, it's 50. It's already here. JP called it over everyone. Interesting. Yeah, JP Morgan. They were the outlier. They were definitely the outlier here. Hey, guys, we got 1,200 people rocking with us on YouTube and X. Appreciate you guys. Definitely means a lot to me. If you're on YouTube, click content here. Subscribe, put the notification bell on so you don't miss out on anything. We're always rocking with you guys here. Appreciate you guys for being here, rocking with us. Man, you love to see it. 50 basis point move. Yeah, my Bitcoin holdings are going up, baby. Let's go. My Bitcoin holdings are going up. So are some of my alts. As I mentioned, the SUI's up pretty nicely. And my big time is looking really good. Cardano's up a little bit. Fetch AI is up a little bit. So Bitcoin may be finding some footing here at around 60,500, that is. Man, I love Arthur Hayes, but he was shitting on RWAs today. It was crazy. I watched his talk today. He went like 2 speakers before Vitalik, and he was just shitting on Ondo Finance and the whole RWA narrative. I'm like, he just flies off the handle, man. I mean, he's got his opinions, you know? He's got his opinions. Can't hear me good? Everybody else said they can hear me pretty good. Make sure your volume's all the way up. I got my mic kind of off to the side a little bit, but should still be able to hear me okay. That might be a little bit better. I'll turn my mic up a little bit. There we go. That should be a little bit better. Let's see what they're saying. Maybe Bloomberg. Let's see who's live right now. Has 2 more 2 more basis point cuts in 2024 is the projection this year. So we'll see. I think that could be something we see. I really do. I think that could be something we see. Another 2 rate cuts before the end of the year. That makes a lot of sense to me. That makes a lot of sense to me. Or Singapore, but hey, we're making it work. We're making it work. Good. Maybe.
Of information is kind of poor.
Yeah, it's going to be tough, guys. Wi-Fi is not having it.
The around these levels for the next 18 months.
Well, we very well could. If we get 225s over the next 2 meetings.
We need to make a decision. What did the data say? I'm not...
could help to stabilize things as well. Just because unemployment has headed up over the last year doesn't mean it has to keep going. It can certainly flatten out here if the Fed does its job.
Hey, Bob, appreciate catching up as always. Bob Michael there of JP Morgan Asset Management. There's a couple of moves in this market that I think are very, very interesting. We've just gone 50. And in some ways, the dot plot is validating what we were pricing in this market ahead of time as well. And what you're seeing at the long end is the long bonds sell off and yields climb by 2 basis points. It's not a big move, but it's notable. We're up by 2 on 10s, on 30s, we're up by 3. And at the same time, we've got gold at all-time highs. What is this market sniffing out?
Well, it's sniffing out on the margins a greater inflationary risk than otherwise priced in. Look, I could make an argument about how it might mean that we're going to suddenly get run away into 70s-style inflation. That's not what it's saying. But what it is saying is that on the margins, the idea of a bigger and frankly, a dovish 50 basis point rate cut really highlights how inflation is still back on the table, at least on the margins.
They're talking about a dual mandate imbalance. Mohammed, your impression is that it's a single mandate central bank now. And you don't think we should take our eyes off the other side of the mandate. Do you think the market's speaking to that? Just on the margin this afternoon?
I think at the margin, yes. But I do think that this is the reaction of a single mandate Fed right now, especially if you believe 2% is your inflation target.
Let's cross over to Dan Swunk and bring her in of KPMG. Dan, we'd love your thoughts on the decision, and then we can get into the nuances. What do you make of the 50 instead of the 25?
This was a huge victory for Jay Powell, who really laid out at his Jackson Hole speech that he was worried about employment. And that is what this is about. And Mickey Bowman doing a dissent, Powell willing to take a dissent among the board members as opposed to among a president. That is how much he wanted this 0.5% rate cut. And I think that's very important. I think you're going to see it couched and explained within the context of several participants at the July meeting thought they were ready to go ahead and cut. So this is a bit of a catch up to that. And so that should help temper a little bit this dovish read on it.
There was a lot
I
of
was
rumors about
surprised
the
that they
July
kept the risk balanced, although clearly the focus is now on employment and not allowing the situation in employment to become much worse. Remember, we're at 116,000 payroll gains, 3-month moving average as of August. That's not statistically different from zero. Combined with the downward revisions we saw on August 21st, the day before Powell gave his remarks at Jackson Hole, those downward revisions, record downward revisions, even if they're not as large as they appeared because of some immigration that we're not capturing, they're still large, and it means the birth and death rate, the death rate of firms has picked up, and their small businesses aren't hiring as much as well, which could mean actually the payroll data for this year also gets revised down, and that's what they're worried about.
Diane, your work out on LinkedIn has been just hugely beneficial, a really holistic view of the U.S. economy. I have a Dow Jones Industrial Average, bottom of the pandemic, up 128%. 21% per year. I've got debt and deficit that Halbronner and Bernstein never dreamed of. Diane Swank, is this a Fed just dealing with our stimuli? Is this a Fed just dealing with debt and deficit to the sky?
You know, we've had everything you could possibly imagine pushed up inflation, and now we're seeing it come down despite the fact that we still have a lot of debt. So, you know, on the margin, yes, we do have high debts, and I do believe we need to deal with that at some point in time. And I don't think we have anyone who's willing to talk about it on either side of the aisle, which is another issue. We can talk about that at a later date. But right now, we've got a Federal Reserve that's no longer buying that debt. And you've got a Federal Reserve that is seeing inflation come down despite the fact that we have high debt. And that's because on the margin, after we get past the sort of 6 months that we put a whole year budget into, from March into October 1st, you get a continuing resolution at best through year end, and you're going to get more constraints on spending, I think, as we get into 2025.
Diane, one reason why this comes as a surprise, this decision, one reason why is because they could have telegraphed this more carefully. There was no data that really moved the needle between the time when the quiet period began and now that would shift us toward 50. Why do you think there wasn't more clear communication that this was a Federal Reserve ready to cut rates by 50 basis points?
Well, frankly, I don't think that Jay Powell, by the time the blackout period hit, had the votes in his pocket to be able to do that. And I think we saw that in some of the mixed messages, even the day of the blackout period. Chris Waller, governor on the Federal Reserve, had said, you know, you'd be open to a more aggressive rate cut, but he didn't say, and sort of talking about more cautious rate cuts, more of a 1/4 point kind of rate cut. So they didn't telegraph it because he hadn't corralled the cats, but this really does speak to the fact that he does have an extraordinary ability to actually do just that.
Let's get to the from no data. Renmark, just now. At the moment, raised to unemployed.
Oh, that happened. But basically, they're reiterating some of the things we said. 25 basis
in our opinion. Lisa, your thoughts?
This is basically what's being priced this year. I mean, how else do they get to more about what they are seeing that suddenly makes that such a consensus, given that we've gotten a lot of mixed.
There in cash. I've been sat here for a long time. You've been warning me for a long time that I face real reinvestment risk. The Fed's just cut 50 and I'm freaking out. I give you a call. I'm now worried about another 50 and maybe another 50 after that. What are you buying on my behalf?
We're telling clients, just get into the bond market. Just get into a general bond fund. It could be an aggregate investment grade bond fund. It could be a core plus bond fund. If you're in a high tax bracket, get into a general municipal bond fund. Yields are coming down. Yields are at this level with $6.3 trillion in cash building up and most people not liking the bond market. Some buying has brought it down here. And this money will come in because they're going to watch the return on cash go down like power windows.
I got to say, Mohammed, this goes to the point that you were making. I'd love your comments on this idea that
some people will wake up and check their phones, check the weather, check the
board, that maybe they're going to be even more aggressive than the market previously thought, and that maybe it is appropriate to price in even more spread compression, even more yields going lower.
So it would not surprise me if that is the market reaction. It would not surprise me at all, because the market has been conditioned to ask for more and more and gets more and more. So it wouldn't surprise me if that is what happens. I will back with a significant dispersion in people in FOMC as to what the destination looks like. And that dispersion has got to solve.
Diane Swank, I got 8 ways to go here. Let's try this. You've got a wonderful reading of America away from 3 zip codes in Manhattan, the quadrants of Washington, D.C. This rate cut, how does it affect America that are not the elites, not the people enjoying NVIDIA to the moon?
Well, this is really important because the rate cuts, the short-term rate cuts are what come through on loans that consumers take out. This is beyond the mortgage rate situation. This also helps the mortgage rate situation, obviously, but the real issue for consumers are short-term interest rates and how they are priced on their debt. Now, on the credit cards, the average credit card rate is about 25%. This is a rounding error on that. It's not going to help a lot on that. That's just incredible how high those rates are. But when you get into auto loans, when you get into other kinds of loans that consumers take and businesses, middle market through small businesses, it affects all those loans. And right now, you can imagine a lot of people are going to get some relief in terms of that. Now, the good news is there's not a lot of overhang of debt for consumers, and they can service the debt they've got. But for those lower income households that have already exhausted all of their savings and then some, this is good news. They rely on lower rates to buy used vehicles. They can't even afford to buy new vehicles anymore. That goes right up into middle income households. So that's where we'll see some movement, but it's not immediate. You're not going to see, the Fed also understands there's lags. And I think Mohammed is right about the issue of the market front running, when the real message here is that this was not signaling that we're ready to cut. This is a window of opportunity to cut now, catch up on July. That's important. But this isn't a signal that they're ready to go 0.5%, sort of continuously. And the election is an uncertainty. That is not factoring into the decision today, but it is an uncertainty in terms of policy for 2025 and 2026. And that could change the trajectory for the Federal Reserve once that cloud of uncertainty regarding the election outcome in the U.S. is lifted.
Could not agree more. Dan, just one of the best, as always, the clinic. Diane Swank there of KPMG. November 7th could be a very, very different meeting. If you are just joining us, welcome to the program. 25 or 50? We got 50 from this Federal Reserve. The outlook, unclear. 10 out of 19 officials favoring lowering interest rates by at least an additional half point over the remaining 2 meetings of 2024. And the next meeting in 2024 could be very interesting if we do indeed have in hand the outcome of the presidential election. Matt Lazzetti of Deutsche Bank joins us now for more. Matt, your first reaction to this one, please, sir. We get 50.
Yeah, I think it's all about the messaging that we hear from Chair Powell about the reaction function as we look ahead. You know, as we were thinking through, if they go by 50 basis points, what is the communications challenge for them? I think it's 2 things. One, they have to project confidence in the economy, positivity in the economy, so they avoid a negative confidence signal. And then 2, I think that they want to send a signal that this is not the new norm, that they're going to be ratcheting down in 25 basis point increments. And as I look at that dot plot and the skew for this year, it does seem that there's a pretty strong kind of consensus around going 25 basis points from here. I think 18 out of 19 dots showed only an expectation of 2 more 25 basis point rate cuts or less. And so I think Powell can paint this as a one-off. It was meant to right-size monetary policy to a lower inflation environment, ensure that the real rate doesn't rise too much, and to really show that kind of actions speak louder than words in providing confidence on the soft landing.
Matt Lazzetti, the 10-year real yield just printed below 1.50. To me, that's a huge signal coming out of the pandemic. What does a diminished real yield do for American business, American finance, and investment?
Look, I think we should expect that the goal of this is to keep financial conditions easy, to ensure that financial conditions don't over tighten and put a soft landing in jeopardy. That is ultimately the legacy of Chair Powell, and I think that he took out some insurance against that today. I think that's a good outcome for the economy. Hopefully he can message it in that way, which is they have a positive outlook. This is not the starting of a 50 basis point cutting cycle. And I think if you get that, soft landing prospects improve, financial conditions ease, and we have a very good outcome for the economy.
Matt, one of the stickiest areas of inflation has been the housing market. And what we've seen there has been recently an uptick in mortgage applications, as well as just in general, some of the home lender stocks. How quickly could you see a transition from a market that is completely flat on its back, not shifting around, moving at all, to one that is robustly price discovering to the upside with people given renewed confidence by lower rates?
Yeah, we got mortgage purchase applications this morning, and they did show a tick up, more driven by refinancing activity than purchase activity. It does seem to be lagging a little bit, the move in the mortgage rate so far. My own view is I think that's driven by, when you look at the University of Michigan or Conference Board, so many consumers expect rates to come down over the next year. And so that has to happen, and maybe as rate cuts happen and as mortgage rates fall further, that really does unleash activity in the housing market. That would present upside risks for the economy. I think the reality is, Q2 growth was 3%. Q3 growth is tracking near 3% according to the Atlanta Fed GDP. When you look at consumer spending on a 3-month annualized rate, it's the highest that we've had since 2011. We got a robust retail sales report this week. So, I think Chair Powell should present a picture where the underlying economy and fundamentals are resilient and strong here, but they were taking decisive action today to ensure that those outcomes continue.
Hey, Matt, final round before you go. Question for the chairman in this news conference. What's your number one question?
I think it's all about reaction function. So, the fact that they went by 50 basis points today before seeing very weak outcomes for the economy will naturally raise questions in the market about what if you get a weaker jobs report? Do they go by 75 basis points or not? So I think it's all about the reaction function from here. And, how does he respond to that? Does he kind of set a high bar either for another 50 basis point or even higher rate cuts?
Matt Lazzetti at Deutsche Bank. Bob Michael at JP Morgan Asset Management still with us. Bob, you love asking this one too, so I'll ask it for you. What's your question for Mike McKee in this news conference a little bit later this afternoon?
As the concept of an equilibrium, long-term neutral Fed funds rate expired, do we need that anymore? Shouldn't they be talking more in terms of a real Fed funds rate, maybe minus 1% to plus 3%? I mean, for goodness sakes, in my career, I've seen the Fed funds rate at 0 and 20%. So trying to target something like that is nonsensical to me.
Hey, Bob, good to catch up as always. Bob Michael at JP Morgan Asset Management. We get 50 from the Federal Reserve. Your news conference is 5 minutes away.
JP Morgan called it.
Like this, up 0.5% on the S&P 500 in the last hour.
Okay, we're going to cut it there. We'll bring in Jay Powell here in about 3-4 minutes, guys. So basically, we got the 50 basis point move by the Feds. The big other takeaway here, we're expecting, or at least a lot of people are expecting, there it is right there on screen. The median projection has 2 more 25 basis point rate cuts in 2024 still to come, for a total of 100 basis points this year. So that's what we're expecting to see. I'm taking some notes here as we go along. I thought another interesting note there, just listening to Bloomberg, was we do have the election coming in November. I've been saying this a lot, right? That this is basically creating a lot of uncertainty in the markets. So we have a little bit more clarity here today, and we might even get more clarity, and this is what I'm going to be looking for, clarity from Powell on the rest of 2024. I doubt he gives us all that much. He normally doesn't. He normally sticks to the script. You know, we're gonna watch the data. The data will drive our decision. That kind of talk. But again, 50 basis point move, 225 basis point moves could be coming still in 2024. That's the median projection. And then we obviously could get more clarity from Powell. Two more 25 basis point moves this year. We do have the election creating uncertainty, and then clarity from Powell on the rest of 2024 will be something we'll be looking for during the actual press conference itself. So, guys, what do you think about this? We are minutes away here from listening to Jay Powell. We'll put that up right there. So we're going to be watching this live, at least a little portion of it here live with you guys. I'm in Singapore right now. It is 2:30 in the morning, but we are here. We're going to sleep in a little bit tomorrow, that's for sure. Still get over to the conference, but you know, this was a big one. This was a big one. And in terms of the markets, Bitcoin is back, you know, right at this 60,500 level. It seems like we're kind of hanging right here now for a little while, at least the last 10 to 12 minutes or so. We've been kind of consolidating here. I think people are waiting to hear from Jay Powell, and then I think we'll get more volatility for sure, you know, coming in here. So what do you guys think here of this? What are your guys' thoughts? I'm curious to hear from you guys in the comment section as Jay Powell getting ready to take the stage here. Definitely give me your thoughts, guys. I want to hear from you. What do you think is going to happen the rest of 2024? Future production says not so bullish. Well, this has been my sentiment. My sentiment has been this wasn't going to change everything anyway. You know what I mean? This one Fed rate decision, even if it was 75 basis points, this one decision wasn't going to change anything. You know what I mean? We need multiple rate cuts over time. That's what we need. We need multiple rate cuts over time. And I think this could be a long-term catalyst here if we get 2 more basis point moves the rest of 2024, and then we get more clarity with the election, then we set up for a really nice 2025. That's kind of my sentiment right now. This is all about setting up a good, solid 2025. Election and policy implementation. Rate cuts to help Kamala get elected. Well, I mean, there's definitely that angle too, William, right? Smash the like, guys. Let's go. Uh-oh.
I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first, improving the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year.
Bitcoin 61K on
projected in June.
Coinbase.
Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished, and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance.
It's pumping.
And we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by 0.5 percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median
Selling a little
projections
bit,
are lower
coming down a
than in
little bit.
June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment.
Put pump it up in the
goals.
chat if you want to see Bitcoin back over 61.
Your questions.
Steve, please
like that, Bunker?
Thank you, Mr. Chairman, for taking my questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50? And how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So
the data.
A lot of questions in there.
The data.
Let me jump in. So since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in based on what shall we make that call? Thank you.
Sure. So a couple things.
Nacho looks bullish, bro.
A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect in the base case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, and inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level. So the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard Schneider with Reuters. How close was this in terms of a decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. You know, if you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut and left it open. And I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, you know, there is a dissent and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books.
Definitely a sell-off here.
Guidance is sort of followed this team on the pacing here.
A lot of volatility,
guys. Expect this to be running every other meeting once we get into next year.
Yeah, we're gonna take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, you know, make a good, strong start. But and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina. Hi, Chair Powell. Gina Smilik, the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
All right, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
25.
Okay.
Just saying.
Multiple questions in there, but so I would say
That'd be great.
we don't think we're behind. We do not think we think this is timely, but I think you can take this as a sign of our commitment not to get behind. So it's a strong move. So your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really made a difference in the form to take this strong move today. I do not think that anyone should look at this and say, "Oh, this is the new pace." You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you, Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. By many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018, 17. So the labor market bears close watching, and we'll be giving
for
it
sure,
that.
Boca.
But ultimately, we think
stick to the script, right?
With an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of.
All right, guys, that's enough from me. I don't think the market's going to do anything crazy here from now until tomorrow morning. I think we're going to see a lot more volatility here. I don't think Jay Powell's going to give up anything here. They've already asked kind of about the future. So I think I'm going to shut it down, get some sleep here tonight. Thank you guys so much for being here with me. Thank you guys. Appreciate it. I think Oscar's still live. So if you guys want to go show him some love, don't forget to subscribe to the channel here on your way out. It means a lot. Yeah, I'm going to get some shut eye here. Appreciate you guys. Thanks. We'll see you guys tomorrow. Bye.